Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. The six-member Monetary Policy Committee is expected to cut rates for the fifth time in as many meetings today. The Bloomberg poll pegs the cut at 25 basis points. The Mumbai Police's Economic Offences Wing arrests Rakesh and Sarang Wadhawan in connection to the Punjab and Maharashtra Cooperative Bank case. Meanwhile, the RBI hikes withdrawal limits for PMC bank depositors from 10,000 to 25,000 rupees. IRCTC's primary offering gets oversubscribed 112 times. The Railways is looking to raise 645 crores, gets bids worth more than 70,000 crores. And frankly, that was a really heartwarming thing. I mean, great for Piyush Goyal as well to create this whole aura around a company which could do well even from the PSU space, and that too from railways. But we'll talk about that in a bit. First, the global setup. And the global setup, to my mind, doesn't look all that bad. Frankly, if you just look at the US markets and what they did in trade yesterday intraday, the last 2 or 3 days we've spoken about how the US markets have come off. And in yesterday's session too, they started off poorly, but post that, there was, despite there being a choppy trading session, an afternoon of recovery for the US markets, and that's the big thing. We recovered quite strongly, and remember, the previous 2 days as well, US markets have had a very tough fall or tough time. So this week hasn't been that great, but yesterday was an afternoon of recovery. Now, what could have happened? I don't know. The US data wasn't the strongest, but post the data coming out and the string of data or the slew of data that is coming is not that strong. I think traders or the market is now pricing in some action from the Fed in the policy later this week. This is a chart which shows how traders are almost fully pricing in a Fed cut in the month gone by. These are that shows the bets, and post the ISM data coming out, those bets really went up. So I'm guessing that it's a combination of traders pricing in some support from the Fed as a result of which, and oversold US markets this week as a result of which there's a bit of a bounce. Now, is that bounce carrying on for the rest of the Asian screen? Maybe not, but they're lying flat. They're not correcting too severely in trade today. The SGX Nifty incidentally showing an uptick in the session today. So let's wait and watch if indeed that happens. You would want to presume that the morning at least will be sans or devoid of any major downside activity, because I really doubt that the Bank Nifty, which is the key driving force for the markets this week, will really show any dramatic moves for ahead of the policy announcement. I really doubt that after 3 days of a correction, traders will be happy to sell the Nifty Bank another 300, 400 points ahead of the policy announcement. So maybe we'll not have that. And in all probability, we'll have very, very stock-specific moves, at least until the first 2.5 hours of trade, until 11:30, until the policy is out. Post that, what happens would also depend on the policy commentary. But until then, I really, really doubt that we'll have index-specific moves, very likely to be stock-specific announcements. But as I said, I think the one key thing that the market would want to latch onto is the kind of subscription that IRCTC has gotten, over 110 times, and this puts focus back on two things. One, that not all PSUs are bad, and with the whole divestment drive that everybody's talking about, maybe PSUs don't find as much discount. Two, quality paper would get some attention, and there are a bunch of companies which are available at the kind of financial or the fundamental parameters that IRCTC is at. Maybe the market would want to start rewarding some of those as well. Let's wait and watch. Too early to say, but maybe we'll see this. Very quickly, to stocks that you should be monitoring in the session today, because the market is unlikely to do too much to my mind until 11:30. The 3 or 4 names that I thought stood out for me today. One, HDFC, the quarterly update is out. Nothing dramatic, but it's important because it's HDFC. That the profit on sale of investments has gone up dramatically for HDFC in the quarter gone by. The rise in profit, of course, is aided by that stake sale in Growth Finance. But otherwise, it's a standard, steady performance by HDFC, which is not bad in a scenario like this. But it's HDFC, you would expect that to do. So nothing too bad, nothing too great. Let's see how the stock reacts today. United Spirits might be, well, an interesting one, because the Telangana government has maintained the status quo in liquor policy for 2 years. Now, remember, the reason why this is important is because earlier media articles had suggested or had hinted that the government was thinking of taking control of sales and distribution in the state, and that would have been a big overhang for United Spirits. Since that has not happened, maybe, just maybe, we see United Spirits reacting in the session today slightly positively. Let's wait and watch. Now, HDIL is a penny stock, so I don't know how much of a reaction comes in on that, or even if it comes, anybody's interested. But maybe there's some interest in Dewan Housing Finance, and because they are related in that sense, because of this arrest that has happened, we might see some reactions in Dewan Housing. Conspiracy theory, of course, or I'm just correlating loosely, but the market may tend to do that, and which is why it's important to point it out. There's no real connection between the two entities per se, but the same lineage, so to say. So let's wait and watch. Sarang Wadhawan, Rakesh Wadhawan arrested might have a bit of a trading impact on Dewan Housing Finance, so watch out for that. And Axis Capital has initiated coverage on Spandana Spurti with a target price of 1200. A lot of factors behind that. We'll probably talk about that a bit later on, but maybe Spandana Spurti tends to react in the session today as well. Let's wait and watch. Lastly, watch out for the currency. The dollar index has been on an up move. We've seen this weakness come in almost a host of currencies. The rupee too was slightly weak in the session yesterday. Let's wait and watch what happens there. But really, it's the king dollar for the last few days. Let's tell you what's lined up on First Word today, though. It's a collection of the top editorial stories that we believe we should bring to you. Firstly, Ida runs us through the factors that will play a role in the MPC's decision today. Charlene then tells us on the EOW's case against Rakesh and Sarang Wadhawan. The recent talks surrounding BPCL's privatization has made the stock an investor's favorite. But does it have much steam left? Somit tries to find the answer. And Indian IT's next bet could be software, says Bank of America Merrill Lynch, but it did not be coming from the existing giants. Agam throws some perspective out there. India's Monetary Policy Committee is deliberating interest rates at a time when the underlying economy remains weak. But will the government's 1.45 lakh crore stimulus and the resultant fiscal pressure limit the room for rate cuts? IA has some data that will influence or could influence today's policy decision.
This is yet another policy meeting where the question is not if the MPC will cut, but by how much the MPC will cut. We will see rates most likely cut this time around, 110 basis points in rate cuts already. Over and above that, you will likely see a rate cut of at least 25 basis points. That is what a poll of economists is broadly suggesting. We're at 540 now. If you do 25 basis points, you'd come down well below that. But there is a range of expectations. Some people saying they may actually do 40 and round it off at 5. Some people saying they'll do 35. Remember, last time we got a 35 basis point cut, so that tried and tested formula of 25 or 50 no longer exists. So the expectation broadly is that you will see a rate cut somewhere between 25 and 40 basis points. Just stay with this chart for a minute because I think the language that will be used to argue a 25 or a 40 basis point cut would be very, very important. If the governor does 25, he will probably clearly indicate that there is more in the offing beyond the stance, which will remain accommodative. Now, if he does 40, will he give us a sense of how low rates can go in the current cycle? I think that's the question that everybody is asking. We used to have a benchmark of real rates, but the governor has now said more than once that they can't use that benchmark because they have a target of a headline inflation and they can't have multiple targets. So then how do we judge how low rates can go in this current cycle? Can they go to 4.5, even below that? I think that's the nuance that central bank watchers will be looking for if there is a cut, say, of about 50 or 40 basis points steeper than the 25 that is being expected. So that certainly is something to watch, the number, the stance, and then the nuance behind the stance as to where repo rates are headed in the economy. Now, obviously the big talking point will remain growth. Between the August meeting and this meeting, we've got the 5% shocker of a GDP number. Not everybody believes that things improved in the second quarter either, so you could see a weak second quarter number. Now, the complexity here is that the Reserve Bank of India kept its forecast at 6.9% for FY20. Nobody believes India can do 6.9% growth in FY20. Will the Reserve Bank of India peg down their forecast sharply? That has a little bit of a confidence impact as well when you see the central bank cutting growth forecast that sharply. So will they again remain on the higher end and say 6.5 and maybe miss their growth estimates for a second year running? We don't know. So we'll watch to see how they justify their growth rate expectation on growth and also what their analysis of growth is. Last time around, the governor said he doesn't believe it's structural. Since then, the annual report in the RBI has talked about a soft patch converting into a cyclical slowdown, but then it went on to say that structural changes are needed to get growth back up. So again, structural, cyclical, and the outlook for the economy will very much be in focus when the governor speaks and the MPC releases its resolution. Inflation, I'm not going to spend very much time because demand-driven inflation is very much at bay. Yes, there is a pickup in some urban food prices. Onions are in the headlines again. But if you're looking at the core inflation number, demand-driven inflation, that's been low. It's come off quite steeply as well. So I don't think there will be much angst on inflation as yet. But will there be angst on fiscal deficit? Now, that's another interesting and important question. Last time's monetary policy resolution stayed away from any debate on fiscal. Since then, two things have happened. One, of course, the tax cuts, which a lot of people can say is a structural change, is actually positive for inflation in the long term, positive for lower inflation in the long term. But there has been other developments as well, such as the shortfall on GST revenues continuing. We've seen GST collections come off quite steeply in the latest month to about 91,000 crore. So is the MPC going to take note of a possible fiscal slippage? Again, something to watch out for in both the resolution and the governor's comments that follow. Two other things I want to point out and things that will be watched out for both by the markets and by the banking sector. This is on liquidity and credit. We've put these in one chart, but there are two separate things actually. On liquidity, now, you know, we got the report that the RBI was working on, which was the liquidity framework report. That disappointed the markets because the markets thought that the RBI will move to a scenario where the liquidity stance moves along with the monetary policy stance. The RBI didn't do that. They said that they would prefer to see liquidity remain in a mild deficit, except if financial conditions warrant. So the market is now back to an uncertain scenario to see what financial conditions at the current juncture warrant. So they will be looking out for the word neutral, some assurance of neutral liquidity, at least in the current context. The reason I put the commercial credit chart here is because, you know, the issues with the banking system have not gone away now for a good 3 to 4 year period. We've had problems in the commercial banks, the asset quality cleanup, then the shortage of capital in public sector banks, then the asset liability mismatches that cropped up in the NBFC sector, some issues of misgovernance in the NBFC sector, and now an issue with a cooperative bank, which, while not large, is not a segment that can be ignored. So we do want to hear from the governor and the RBI team as to how they are strengthening supervision in the banking system, giving out some confidence, which is crucial for the economy at this point in time. So lots to watch out for. Friday is when the Monetary Policy Committee delivers its decision and the RBI holds its press conference.
Yep, about 3.5 hours from now, you can catch the live coverage of the Monetary Policy Review on BloombergQuint from 11:30 a.m. onwards. There has been a new development. Moving on, there has been a new development in the PMC Bank case. The Economic Offences Wing of the Mumbai Police has arrested 2 HDIL directors, Rakesh and Sarang Wadhawan. Charlene D'Souza reports.
The Economic Offences Wing of the Mumbai Police today arrested Rakesh Wadhawan and his son Sarang Wadhawan, both directors of HDIL in the PMC Bank fraud case. Now, the police said that they were both not cooperating during investigation, due to which they went ahead with the arrest. Now, let's go ahead and see what was said by the Mumbai Police in the press conference.
They were called for questioning today at the EOW office. The response from them was not sufficient and not satisfactory, and also the their role in this case and was found to be sufficient grounds for their arrest today. And the SIT that has been formed for this case is looking into all aspects of this case, and the inquiry and the investigation is still on.
EOW officials told BloombergQuint that properties worth rupees 3,500 crores has been attached, which belong to HDIL. Now, these properties also belong to the Wadhawan in personal capacity, which were bought by seeking loans in the company's name from PMC Bank, which were then diverted to their personal accounts. Now, EOW has shared the FIR with ED. Now, EOW has also searched the residence of Varyam Singh, the erstwhile chairman of PMC Bank. They have freezed one demat account which approximately has of shares worth rupees 100 crores. Now they are still checking what is the value of the shares in this account. As of now, based on the documents seized from PMC, EOW believes that the property was mortgaged to PMC. EOW is still checking if the same property was mortgaged to any other bank. EOW's probe till now indicates that some PMC officials tampered with PMC's software. That's why 44 accounts mentioned in the FIR do not reflect in the system. These employees masked these 44 accounts with passwords, resulting in these accounts not reflecting in the system. Interrogation of these bank officials are still going on. Details of HDIL properties, resident and commercial projects and land parcels are still awaited.
Well, and as I said in my trade setup as well, this is something that has caught a lot of people by surprise. When people heard of this news yesterday, when the BloombergQuint WhatsApp reached them, so many people messaged me back saying that, are you serious? Has this happened? So it's a big development. It might have a bit of a bearing on a couple of stocks as well, but just fundamentally, it's a very big development. So keep this at the back of your mind. It's a case to monitor for sure. Moving on to some market-related stuff, squarely market-related, let me put it that way. The government is considering a proposal to sell BPCL to foreign private entities, sending the stock into a bit of a tizzy. Investors are hoping that privatization will help the refiner maximize profits without worrying about the political considerations. But has the sharp spike in prices taken the stock beyond the possible benefits from the sale from a stock investor's perspective? Sumit Sarkar tries to analyze that. Sumit, good morning.
Good morning. So if you see in the last month, BPCL's share price rose as much as 32%, and which is the highest monthly gain since July 2008. And what's more, the rally hasn't stopped. So far in the first 2 trading days of October, if you see, it has managed to gain over 10%. So it's a total rally of over 42% that we have seen in the last 1 month and 2 days. Now, this rally was mainly on the back of media reports that the Indian government would sell its entire 53% stake in BPCL to a global oil company. Now, because of the sharp rally, BPCL has now become one of the most expensive oil refiner and marketer globally. Now, if you see the 12-month forward enterprise value to EBITDA valuations of BPCL, now that stands at around 10.1 times. Now, this is 33% premium to its 5-year average and a 58% premium to the global average. Now, the move of privatization is not only expected to help the government meet its divestment target, but also boost competition in the sector that has long been dominated by straight-run firms. Now, the valuations for BPCL are not only at a premium to its global peers, but also at a premium to the recent 2 deals in this sector. Now, in 2018, ONGC had acquired government's stake in HPCL at 474 rupees a piece, now, which implied a valuation of close to 9.4 times to its 12-month forward EV to EBITDA. While the Aramco Reliance Industries deal, where Aramco decided to buy nearly 20% stake in Reliance Industries refining and petrochemical business at an enterprise value of $75 billion. Now, that implied a valuation of close to 7 to 8 times, and current BPCL's valuation is 10.1 times, which implies that the valuations are actually stretched for BPCL. Even the Bloomberg consensus target price of 39 analysts, which also factors in the recent announcement of stake sale, stands at close to 439 rupees, which implies a downside of nearly 17% for the stock price. So all these factors do really point to the fact that the valuations for BPCL are now stretched currently at 10.1 times.
Sumit, so the question then arises that there is an obvious answer to why the market would be so excited about BPCL's privatization. Are there some unobvious answers?
Well, the only obvious reason why markets have rallied and on the back of this privatization announcement was this privatization will reduce the risk of government interference, which has been a key overhang on the share prices and kept the valuations depressed in the past. Now, despite deregulation of petrol and diesel prices, the government of India continued to interfere, especially ahead of key political events and also when there was a sharp surge in oil prices. If you remember, in 2018, government had asked the oil marketing companies to bear 1 rupee impact, which had actually lowered their gross marketing margin and impacted their earnings. Also, during general and state elections, we have seen that the oil marketing companies refrained from increasing retail fuel prices despite a surge in crude oil prices, which again impacts the earnings. Along with this, if you see the late subsidy reimbursements and high dividend payouts that the government has been asking from the oil marketing companies to meet their divestment target, amid capital expenditure plans of these oil marketing companies have actually taken that debt higher. Now, in financial year 2019, the combined debt of all the 3 oil marketing companies were at a 10-year high, and this was mainly on the back of late subsidy reimbursements and high dividend payouts that the oil marketing companies have been giving to the shareholders. However, this privatization did not necessarily mean an end of government intervention, which is the key theme and key reason why the share prices had rallied for BPCL, as despite this stake sale, Government of India directly and indirectly will still control the majority of the retail fuel market in India. If you see, if BPCL is privatized, then private players would control nearly 33% of the retail fuel market, while the government through Indian Oil Corporation and HPCL would control nearly 67% of the retail fuel market. So with majority share, they can still control the pricing of petroleum products, thereby impacting BPCL earning, though it might get privatized in future.
Okay, Sumit, thanks so much for putting that into perspective. Keep in mind, there's a big spike in the stock yesterday as well, on anticipation that there will be some bit of cabinet clearance that could come in, just from a very near-term perspective, because there was a spike yesterday and some build-up yesterday. I don't know, I just feel that you might see a bit of a cool-off because the announcement didn't happen yesterday as anticipated, so do watch out for BPCL. The last piece on First Word today is about IT. India's biggest export to the world is IT services, but it's been at the lower end of the spectrum thus far. The thrust, says Bank of America Merrill Lynch, has been on offshoring, technology consulting and back-end services, but that's set to change according to the broking house, which pegs the potential market at an additional $50 billion. Agam is standing by to tell us why. Now, Agam, I'm surprised because I thought all of this is something that the Indian software services firms anyways do.
Yeah.
What's happening? What is Merrill Lynch trying to say?
I think the distinction here that we are trying to draw is the difference between IT systems, installation of IT systems and offshoring, as against just software. And software as a business by itself. And that, of course, is again surprising to me as well. It's just $8 billion large, which is a very small number if you consider the entire software or entire information technology sector, which is worth around nearly $180 billion. And this is just India. So the contribution of software is very, very small right now. And Bank of America Merrill Lynch is saying that there could be a higher contribution and could go down up to as much as $50 billion eventually, and of course that could also be a key growth driver as far as the sector in general is concerned. And they go on and mention that SaaS, also known as software as a service, is something that will drive revenue. So far what we've had is, you have software which are installed in your computers individually, but now we have softwares which can be used on the internet and be applied, and you don't need to actually install that. Of course, this has been in play for a while now, but it's only now catching up. And well, they're talking about a handful of private names. We've spoken enough about listed names and their presence there, but in terms of private names too, there are some very, very interesting companies which are actually will offer some of these names, of which, of course, the CRM out there is customer relationship management, and HCM is your human capital management. So you have Freshworks. We all know about Dhruva and Zoho. Zoho, of course, is the largest among them all, considering it has revenues to the tune of around $350 to $400 million. So it's by no way a small company. And all these four companies, are based on a lot of that has to do with SaaS, and they are driving the software growth. Now, of course, in the listed players, we do know about HCL Technologies buying IBM's products last year, and this is where their exposure to software also increases to as much as nearly 11-12%, or 15% actually. And of course, we know about TCS, Diligenta, and banks, and Infosys has its own software as far as BFS is concerned. So they will also be contributing to just the software aspect bit, and that Bank of America Merrill Lynch says that, it's ripe to grow as much as fivefold from what it is right now. They also argue that there is enough talent and there is enough venture capital which is present in India, and that is something that will also aid growth. So about 70% rise in venture capital funds, which is already in place, and some of the software firms have seen a growth of around 15 to 17% annualized, and we do have another $1.6 billion invested in SaaS companies. So all these factors taken into consideration is something that could boost well, India as a software player. And well, if it does become a $50 billion player, then it will comprise of 1/10 of the global well, supply, if you can call that.
Great, Agam. It's very interesting, and my thoughts, of course, you would have yours as well, but every single time over the last 15 years that I've been following Indian IT or the markets, every time obituaries are written about how Indian IT will not be able to compete on the global arena.
Yeah.
There are some of the other levers that come in, be it offshoring or offshoring in a bigger way.
Yeah.
Then the sporting companies like HCL deal with Man U or Wipro's deal with Chelsea, I presume, or some of the others came up, and that sporting avenue opened up, and now this is opening up as well in a big way. So every single time people write them off, there's something or the other that Indian IT firms managed to do to clock in that 10-12% growth.
Yeah, and what is interesting is that the report again mentions one of the majors where the growth was around 7 to 8%. It was because of software that went down to double digits, and that of course is clearly a positive here.
Well, let's wait and watch. Maybe they have something up the sleeve that the markets fail to realize. Agam, thanks so much for putting that into perspective. That's a very a fairly large Bank of America Merrill Lynch report that Agam has tried to compress and give you a synopsis of. But that's all that we have on First Word today as well. Lots more lined up on Indian Open though. We talk about what's gotten foreign investors a bit worried, if at all, after the government announced the tax breaks with Sameer Arora of Helios Capital, expectations from the Monetary Policy Committee with Shubhada Rao of Yes Bank, and a conversation with Rishi Kapoor of Invest Corp on the sidelines of the India Economic Summit. Stay tuned to BloombergQuint Live.